Good morning to everyone. A warm welcome to this webinar on excise tax by WTS Dhruva. I hope everyone is keeping safe. My name is Deepak Agarwal. I'm an associate partner with WTS Dhruva based out of Dubai, handling excise and VAT matters for various companies in GCC. I'm sure you would agree a lot has been spoken about, discussed about VAT, and excise tax, I would believe, has not got its fair share of treatment. In fact, last year around November or December, the revenue numbers for VAT and excise were out. And not surprisingly, starting 2018 to October 2021, VAT had grossed up around 96 billion dirhams as revenue, whereas excise was approximately 9 billion dirhams. It does not really surprise me, because if you look at excise, it's only levied on a few products. The rate of tax, obviously, it's very high compared to VAT, but it's the number of products the tax is levied on is very low. Therefore, the numbers, personally, I would say 96 vis-a-vis 9 is a pretty good number, and therefore justice needs to be done in terms of the excise tax payments, the compliances, etc. And again, having said the above in terms of the revenues, what we've experienced based on the companies that we help with regular compliances, litigation, etc. There's a lot of opportunity. There's a lot of challenges around excise tax implementation, compliances, and so on and so forth. So that really brings me to the agenda. What we plan to do is, along with my colleague Gaurav, we'll be taking you through spending a few minutes on overview and compliance, just to set the context. We'll talk about certain specific issues around sweetened beverages, excise tax refunds, damaged goods, lost stocks, how do you calculate RSPs, stockpiler compliances, and then generally talking about certain other challenges. Now, I'm sure you would be wondering, what are these numbers flashing on your screen to the right? These are the numbers or the taxes or penalties that we've seen across various companies. So to give you an example, we came across a company which got registered in October 17, did the stockpilers calculation and sent it to the FTA for approval. Right? And they were just sitting idle on it. And only after 2 years, when in December 19, there were additional products introduced, the FTA approached them to ask them, have you paid tax on that? To their surprise, obviously, they had to pay the tax, and the tax was around 100 million, and they got levied a penalty of 350 million. In another case, what we saw was a client did not get registered in October 2017. It's only in December 19 they got registered, but the FTA came back to check with them, were you kind of selling carbonated drinks and other products? And there again, the liability, what we saw was around 3 million was the tax, and 9.5 million was the penalty that got levied. As we move forward in terms of the excise, on the speakers, yes, obviously I'll be kind of moderating the entire session. Gaurav will be talking on certain specific issues, following by some concluding remarks by me. Housekeeping rules, nothing new really. If you have any technical issue, please feel free to drop a message in the chat box and our technical team will assist you. If you have any questions, feel free to drop in the chat box again. The webinar is recorded, and we'll be happy to share the recording post the presentation. Moving on to overview and compliances, excise tax, typically referred to as sin tax, is levied on specified goods or harmful substances to human health or the environment at large. Again, it's a very major tool used by various governments to discourage people from buying certain specified goods, or it really alters the public behavior. So if it's pretty human that if somebody were to pay a few extra dirhams for a product, it sometimes really hurts, and it's a deterrent for people to not buy such products. But again, excise tax is something which needs to be carefully implemented, and if not implemented correctly, it could really lose its the essence for which it is proposed to be implemented. Again, there are two important objectives for implementing an excise tax, as I said earlier, to discourage people from not consuming specified products, and the other is it's a revenue earner for the governments. And once the excise tax is introduced, obviously there will be an increase in consumption of certain products which are not taxed, which are the healthier options, and the excise tax products obviously become expensive, and therefore there will be a reduction in consumption of those. More from a policy perspective, government's perspective, these taxes are touted as a win-win situation, because let's say if excise tax is introduced, people would generally reduce the consumption, and therefore the expenditure that the government incurs on healthcare facilities comes down, and therefore the pressure on the government is less in terms of providing healthcare facilities. But if at the same time you don't see a change in the pattern of consumers consuming these goods, there will be an increase in the excise revenue for the government, and therefore it's a win-win for the government. As we move, so again, I'm sure most of you would have seen this slide earlier in some other forums or webinars. If you look at the GCC countries, UAE and KSA really have introduced excise tax on most of the products which are harmful. Bahrain, Qatar, and Oman are nearly halfway through. Kuwait is something we are just looking at in terms of when it get introduced excise tax. Obviously, VAT again is something which we are keeping an eye on. How excise works, again, not to spend a lot of time, excise tax is applicable either on an importer or a producer of excisable goods. The producer or the importer will sell it to the wholesaler or distributor on payment of excise tax. Therefore, the excise tax gets built into the price of the product. The wholesaler could sell it to the retailer, so the tax price gets passed on from wholesaler to the retailer, and these products appear on the shelf in a retail outlet. So therefore, the consumer ends up paying a higher price compared to if there would haven't been any excise tax. So this is how typically excise tax works. Coming to compliances, there are some specific declarations that a company or excise tax assessee needs to be keeping in mind. In import declaration, when you import goods, you fill in EX 201. There is a designated zone where goods are sold from a designated zone, stockpiler, exporters. So these declarations really culminate into the return excise 200, which needs to be filed regularly with the tax authorities. Sorry. Now, before I ask Gaurav really to get into discussing the intricacies of the issues around sweetened beverages, stockpiler, RSP, etc., we thought we'll just test your knowledge. Not really testing our knowledge. This is more of way we are kind of sharing our experience to help you meet your excise tax obligations. Can we have the poll question, please? Yes, so this is more around the excise tax compliances. So going back to the declarations that need to be filed, the question is, if you have multiple exports during a tax period, do you have to file multiple declarations or during that tax period, or how does it work? Is it allowed that you file multiple declarations or not? Another 10 seconds. So the question is, if you have more than one export declarations, do you file multiple declarations for a tax period? Yes, results, please. So the answer is yes. Surprisingly, the answer is yes. Actually, practically speaking, we've seen it's difficult to file multiple declarations in a return. However, what needs to be done is you make use of an Excel sheet, put all the details in that, and then you submit one declaration as part of your tax compliance. Yes, Gaurav, over to you.
Okay, thank you, Deepak, for the introduction. As stated by him, we'll be discussing some key topics like sweetened drinks, RSP calculation, deductible excise tax, loss and damage goods. Because why we have chosen this topic is practically we have identified that companies are facing challenges in terms of these key issues. So in the coming slides, we'll be discussing all these topics in detail. Firstly, I'll start with sweetened drinks. Um, Now, what is a sweetened drink? So basically, sweetened drink, it is a product to which a source of sugar and sweetener is added. It can be in two forms. It can either be a ready-to-drink beverage or a concentrate, powder, gel, extracts, or any other form. Now, if this criteria is fulfilled, then the product will be treated as a sweetened drink on which 50% excise tax will apply. Now, it seems simple, but it is not as simple because there are certain things which company needs to identify and take care of while identifying whether a product is a sweetened drink or not. And also, correct classification is really important because if let's say a product is an energy drink and company has classified that as a sweetened drink, they might be paying less excise tax because excise tax rate on energy drink is 100%. Um, Now, law provides for certain exclusions for sweetened drinks. They have given four exclusions. First is if there's a ready-to-drink beverage containing at least 75% milk or milk substitutes, then in that case, it will not be treated as a sweetened drink. Apart from this, there are other 3 points wherein if it is a baby formula or a follow formula or baby food, then if it is a beverage consumed for special dietary needs as prescribed by the GSO standard 654, and lastly, if it is a beverage consumed for medical uses as per GSO standard. Now, I will explain this sweetened drink concept through an illustration. I'll give an illustration. Let's say if there's a company A and it is selling this product in a powdered form. Now, this product contains sugar and sweetness. Apart from this, in the product packaging, there is a preparation instruction which states take 300 ml of milk or water per 3 teaspoons, basically 30 gram of powder. So basically, as per the preparation instructions, this product can be either mixed with milk or water. So the question is whether it is a sweetened drink. And the answer is yes, it is a sweetened drink. So basically, this is a powder which can be mixed with milk or water. The exclusion that we discussed in the previous slide, it stated that if a product can be mixed with milk and the milk content is more than 75%, then only it is excluded as a sweetened drink. However, in the instant case, we can see that this product can also be mixed with water. And that is the reason the company cannot claim the benefit of the exemption given under the law. I'll take one more illustration. There's company B, again similar illustration. There's company B. They are engaged in sale of a powdered form product. This product contains sugar and sweetness. Now, over here, the preparation instructions of the product clearly states that this product, okay, take 300 ml of milk per 3 teaspoons, basically 30 gram of powder. Now, it clearly states that this product can only be mixed with milk. So the question is whether it is a sweetened drink. So the answer to this is if milk content after mixing the powder is less than 75%, then yes, it is a sweetened drink. And if the milk content is more than 75%, then it is non-accessible. Now, based on the illustration, we understand that it seems pretty simple. That if it is more than 75% or less than 75%, that is the criteria to determine. However, practically, we have observed that there are certain parameters to determine whether a product contains 75% milk content or not. And in the ensuing slide, I have covered certain broad parameters which an industry can take care of while identifying whether a product is a sweetened drink or not. These are some broad parameters. Firstly, the packaging and labeling is a very important aspect. Company needs to ensure that how they are packaging the product and how the product is labeled in the market. Second important document is lab reports. To justify the product milk content in the product, let's say 75% or more than 75% or less than 75%. The UAE, there are various authorities, government authorities in UAE, which certifies the milk content within a product. So a company can take that certification from that authority, and that will act as a very good evidence to justify to the FTA in terms of what is the percentage of milk content in a product. Apart from this, the ingredients of the product that needs to be checked before confirming whether it is a sweetened drink or not. Preparation instructions, as stated in the earlier illustration. If a product can be mixed with milk or water, the scenario changes and it will be a sweetened drink. Branding and marketing. Also on this branding and marketing, one important point is if a product is marketed as a healthy and nutritional product, that itself will not entail a product to be outside the scope of excise tax. All the things are required to be considered in whole. When we say whole, it means we have to consider everything: the preparation instructions, usage, lab reports, all other important documents. Uh, Also, one more point is retailers' websites. So basically, various retailers are displaying your product and selling it online. Now, let's say if your product, the packaging of the products says X instruction, but the retailer's website is showing Y instruction. So there's a gap between the instruction given at the retailer's website and on your product. So again, you as a company needs to ensure that there is a parity between retailers' websites and the actual product packaging. Now, this a company can consider these parameters and identify whether a product is a sweetened drink or not. To this, we'll take one poll question and see whether anyone can answer this poll question. Yes. So basically, there's a drink which has added sugar. That drink can be mixed with milk. Now, when it is mixed with milk, milk content is less than 70 grams. Now, this product, it is marketed as an energy drink. Now, how it will be classified, whether it is an energy drink or a sweetened drink? Uh, we can wait for 5 more seconds. Answers, please. Okay. So as expected, so there is a confusion whether it is an energy drink or sweetened drink, because we have got 50% answer. So the correct answer is energy drink. There are two reasons to it. Firstly, law clearly states that if a product is marketed as an energy drink, so it will be treated as an energy drink and 100% excise tax will apply. Secondly, law also states that if a product can be classified as both sweetened drink as well as energy drink, then in that case, higher excise tax rate will apply. That is 100% excise tax rate and accordingly energy drink. So I hope now this confusion gets clear amongst everyone. So we'll move on to the next topic, which is the deductible excise tax. Before discussing this, we want to clear one confusion which is generally there amongst the companies. Deductible excise tax and lost and damaged, these two are different concepts. Deductible excise tax comes into the picture wherein, let's say, company has already paid excise tax and now they want the credit of it. And there are certain scenarios which is given under the law to claim the deductible excise tax. Whereas lost and damaged declaration, that comes into the picture wherein there is a waiver of excise tax by the FT. So deductible excise tax, it is similar to an input tax credit that a company can claim. However, lost and damaged declaration, it is somewhat a waiver of excise tax by the FT. Deductible excise tax, this tax can be claimed as a refund or a credit by the FTA when the company has paid excise tax on the goods, on accessible goods, and that goods are now getting exported. Second, the tax is paid on the accessible goods, and that good is becoming the component of another accessible goods. So now in this case, that another component, that another accessible goods, any which was company is required to pay excise tax on those goods. Now, while paying excise tax on those goods, company can claim the credit or the refund of the excise tax paid on the earlier component. Thirdly, if any amount is paid to the authority in error, then the company can claim the benefit of the deductible excise tax. Now, to claim the benefit of this, companies are required to file deductible excise tax declaration, which is EX 203. There are 2-3 important points which company needs to take care while filing this declaration. First is, when filling this declaration, company needs to put the reason, which we discussed in the previous slide, whether it is for export or it is a component or the company has paid an amount in error. Apart from this, when submitting this declaration, companies are required to submit proofs. So let's say, for example, company has exported accessible goods. So they need to submit the customs declaration and all the other export related documents, transport documents, bill of lading, etc. So once this declaration is submitted, FTA will review the declaration along with the supportings. Once they are satisfied, they'll approve this declaration and company can then claim the benefit of this at the time of filing the excise return. Now coming to an important concept, which is the lost and damaged goods. So we'll explain this through an illustration. So there is an entity based in designated zone. Now that entity either imports or produces accessible goods. So as the entity is based in a designated zone, no excise tax is applicable. Subsequently, this entity is transferring the accessible goods either to, let's say, a foreign entity or to other entities based in designated zone. So generally, excise tax is not applicable on this transfer. However, there are certain scenarios where an excise tax may apply. These scenarios are if the goods are getting consumed during the transfer. If during the transfer accessible goods get consumed, then company needs to pay the excise tax on those goods. Second scenario is deficient or missing goods. And third scenario is if during the transfer, this entity is not following the desired rules prescribed by the FTA. Now, out of these 3 points, most important point is the deficient or missing goods, wherein FTA has given certain relief. So we will discuss that in detail in the coming slide. So basically, in case of the deficient or missing goods, excise tax is ideally not payable. However, FTA has prescribed certain conditions. First is an entity is required to file EX203B, which is the loss and damage declaration, within 30 days of the deficient or missing goods. Once this declaration is filed, okay, the FTA officers will visit the premises. Okay, they will inspect your records, will inspect the stocks which is not there. They'll see the documentation. Once they identify that there is a legitimate cause for this deficient or missing goods, then they'll approve the declaration filed by you. So this is the practical mechanism that is being followed by the FTA. What we have seen is FTA is initially coming, let's say we have filed the first declaration or there are 2-3 declarations initially. Then FTA is visiting the premises. After it is streamlined and FTA is approving without any visit. So to explain this in more detail, we'll take one more illustration. And this is a classic illustration for a cigarette producing or a manufacturing entity. So there's a company based in designated zone. They are importing raw tobacco. Now, as the entity is based in designated zone, there is no excise tax which is payable on this import. Now, after the raw tobacco is imported, company is producing cigarettes out of this import. Now, any manufacturing process or any production process, they have normal loss. So again, in this production process, there is a normal loss. So the classic question over here is whether company can claim the benefit of the deficient or missing goods in case of normal loss. So the answer to this is quite subjective. We have seen a practical case wherein a company had a normal loss. So they approached FTA in terms of getting the benefit of the loss and damage declaration. The FTA officers visit the premises of that entity and they stated that, okay, company has a documented process in place which was certified by the authority. Company has appropriate records. So based on that, FTA actually approved this normal loss and they stated that the company can claim the benefit of loss and damage declaration in case of a normal loss. However, if you will ask us, it is not a standard answer and it is always advisable to get it confirmed with the FTA, whether loss and damage declaration benefit can be taken by the entity, because it will definitely depend on the industry that you are in. After this, we'll come to the other point, which is the deficient cigarettes. This is pretty simple, which we discussed earlier also. If during production, if there are any deficient or missing cigarettes, then company can file the loss and damage declaration and they can claim the benefit or the waiver of the excise tax based on such declaration. And third important point is the expired cigarettes. The important point over here is neither loss and damage or deficient or missing nomenclature is defined under the law. So basically the question over here is whether the term expired can be treated as deficient or missing as per excise tax law. That is an open question again. See, if If we'll go by the normal terminology or the general meaning, one can say that it can be treated as deficient. But again, it is advisable for the companies to get it confirmed with the FTA. They can also file a clarification to confirm whether expired stocks can be treated as deficient and can company claim the benefit of lost and damaged goods. I'll come to the next important point and this lost and damaged goods, which I think everyone must have noticed. This lost and damaged provision, it is applicable only for the entities which are based in designated zone. Now, what will happen to an entity based in mainland? So, unfortunately, currently the law does not prescribe any benefit for lost and damaged goods for an entities based in mainland. Now the solution for these entities are they can go for the designated zone registration. Obviously, this is based on the analysis that they can do based on the materiality or the quantum of the lost and damaged products that they have. Based on that, company can identify and apply for the desired registration. So this is all about the lost and damaged part.
Sorry, Gaurav, just points while you were speaking, obviously we've taken the example of cigarettes. This, I believe, is equally applicable to other products in terms of, let's say, the carbonated drinks or sweetened beverage, and typically for expired stocks, because the other products like sweetened beverages do have an expiry date, and therefore a lot of companies will have this an issue. But again, the suggestion of having a DZ entity, as you said, there has to be a cost benefit analysis. But the other option the companies could, look at is getting together as an industry and making application to the Ministry of Finance, seeking, the fact that there is a difference being created between a DZ entity and a mainland entity where the taxes kind of levied applicable equally. Therefore, the industry could look at taking that approach in terms of making an industry representation and seek some waiver on this.
Right. Okay. So moving on to the next topic, which is the RSP calculation. I think this is the most important topic wherein we have seen that almost all the taxable persons are facing issues in terms of calculating it. And even FTA was aware of this, and that is the reason they released a cabinet decision in terms of how to calculate the average RSP. So first we'll start with the basics. What is an excise price? So excise price is the higher of the price which is published by the FTA on their portal or the designated retail selling price. Now, what is the designated retail selling price? It is higher of the recommended selling price or the average retail selling price. The recommended selling price, it is basically the retail selling price, the price at which the products are sold to the end consumers. That is the recommended selling price. Average retail selling price, FTA has given an approach in terms of how an average retail selling price is required to be calculated. We'll discuss that over here. Now, FTA has given a mechanism in terms of how to identify the average retail selling price. Out of these 6 steps, the most important point is the first point wherein companies are required to identify different retail selling price. We'll cover that in detail through an illustration in the subsequent slides. Apart from this, as a calculation, all the other steps are quite simple. Basically, a company needs to identify different RSPs of the accessible goods in the previous 12 months and then multiply that with the number of units sold. Once company will have the market revenue, they can divide that by the total units. Then they'll arrive at the average. So out of these 6 steps, the most important step and the complicated step is the step number 1, wherein companies are required to identify different RSPs. And why we are saying that it is difficult? Because practically we have observed that companies are having n number of SKUs, n number of products, and n number of prices. So through system also and through calculation also, it gets a little bit challenging. So FTA has given basically 2 scenarios to identify these different retail selling prices. First is they have given a scenario wherein if a company is having a maximum of 2 customers. So it is pretty simple. If a company has a maximum of 2 customers, then they can easily identify the different selling prices of these 2 customers. Now, what will happen if a company has more than 2 customers? For this, FTA has prescribed an approach. They have stated they need to identify a sample of retail selling prices, which represents at least 50% of the total sales volume. So basically, whatever their sales are, they need to identify at least 50% of their sales volume, and this should involve at least 3 customers. So basically, for the previous 12 months, they need to identify all their sales, identify sales volume, and from that sales volume, identify 50%, which covers at least 3 customers. Now again, it they have given this approach, but practically we have observed that it is little bit challenging in terms of calculating this retail selling prices, because companies introduce a lot of offers in terms of discounts, buy one get one. Then there are various offers in terms of 25% discount, 10% discounts. So there are n number of retail selling prices, plus there are n number of SKUs as well. So again, even though FTA has prescribed this approach, still industries are facing issues in terms of calculating the different RSPs. Also, in the recent tax season meeting, we have got an update that FTA might be coming up with certain approach for the RSPs, wherein they'll again simplify in terms of how to calculate average RSPs. So we are waiting for that approach to be released by the FTA. Now coming to one more poll question in terms of RSP. Just we wanted to understand how the industry, whether the industry is facing any difficulty in terms of calculating RSPs. So can we have a poll question? Okay. So whether it is difficult to identify and calculate the average retail selling prices as per the mechanism specified by the FTA. We wait for 10 more seconds. Okay. Can you have the answers, please? Yeah. So as expected, 63% of the audience feels that it is difficult, and even FTA is aware of this. And let's wait. FTA might release some new mechanism in terms of simplifying how to calculate the average retail selling prices. We'll move on to the next topic, which is the stockpiler calculation. I'll hand over this to Deepak to take you through this.
Right. Thank you, Gaurav. Thank you so much. I think it was an interesting discussion around sweetened beverages, and again, the designated zone stock benefit, the lost and damaged benefit that's been given only to designated entities. Right. Stockpilers, again, I'm sure, some of you would have practically dealt with this in terms of being a company that deals in such products. And I'm sure you would be aware, the idea behind Stockpiler is that when the government was really looking to introduce excise tax in October and December 19, October 17 and December 19, they did not want people to hoard stock of goods that attract excise stock. Otherwise, they would have bought those goods at a lesser price, but inflated the price without including the excise tax on that. So that's where they wanted to discourage these practices, and there the concept of stockpiler got introduced. Now, in terms of what really stockpiler is, it's again defined in the law. Can you move to the next slide? So who's a stockpiler? Again, he is a person who's holding these goods. He intends to sell them in the course of business to another business, and no tax has been paid on these goods, and he holds excess excise goods. Now, again, the law is talking about what's excess excise goods. That's where the point where I was earlier explaining, there could be people who would be stocking these goods just before the introduction of excise on a particular goods. So the law again defines what excess excise goods is. Next slide, please. So excise calculation of excess stock has been defined in the law. The excess stock means that goods are owned by the person. Again, they are acquired prior to the date of levy, and they'll be sold in the market in the course of a business. And the quantity exceeds the average monthly stock. Now, the law talks about two calculations. So if you look at the right side of your screen, There's a stock-based calculation, which is very straightforward. You take the average monthly stock pre the date of levy. For example, let's say 1st December 19, you need to look at the last 12 months period and calculate your average monthly stock. For just to make it simple, I've kept it as B. The other calculation is sale-based calculation, where you calculate 2 times average monthly sales in the last 6 months, in the last 12 months. So you just take your sales, divide by 12, multiply by 2. That will give you a number which is C. The stock as on the date of levy, let's say it's assuming it's A. Now you need to compare these values A, B, C with your stock with each other, right? And if your stock as on the date of levy, that is A, is greater than B but less than C. So the two calculations, stock based and sale based. Then, and so as I said, if it's A is greater than B, you take the difference between A and B. That's the stock on which you need to pay tax. If A is greater than C but less than B, then you need to take the difference between A and C, and the balance is the stock on which you need to pay the tax. There could be a situation where both A is greater than both B and C, in which case you calculate the difference between A, B and AC, and whichever is higher, that's the amount on which you need to pay the excise tax. Now, we thought it will be a good idea to kind of, understand the challenges around stockpilers. And what we've seen is there are a few challenges. For example, the example you are discussing here is, let's say a company has a bundled product which contains a liter of carbonated drink or an energy drink. There is 500 ml of orange juice and 300 ml of apple juice, right? Now, again, tax on these products were introduced at different dates. Therefore, it becomes relevant to look at what are the implications. So the three questions: one is obviously what's the implication on the two dates, 1st October and 1st December? How do you calculate the excess excise good and the RSP? So in terms of the taxability, as on 1st October 2017, only the carbonated drink or the energy drink will be excisable, whereas the juices were not taxable at that point of time. So you need to just tax the carbonated drink. The other date, 1st December 2019, that's when the carbonated drink were already taxed, so there's no tax applicable at that point of time. But the juices, excise tax on juices got introduced on 1st December. Therefore, those are the two products that will attract excise tax. So now you have a bundle of a product where you have a carbonated drink and 2 pack of juices. How do you calculate the excess excise goods in this, right? So you need to actually break the product bundle into 3 respective products: a liter of carbonated drink, 500 ml of juice, orange juice, and 300 ml of apple juice. You need to calculate the excess stock at each of these product levels. Now, the other challenge we saw, not in this example, you could have, let's say, companies who are selling to retailers as well as wholesalers. So when you sell to a wholesaler, the unit pack could be a pack of 12 units, right? Whereas when you're selling it to a retailer, it could be a single unit. So from that perspective, whether I need to use excess stock at 12 pack as a unit, or do I take it as a unit, as one unit? Say, let's say a can of juice or a can of carbonated drink. So that's again a confusion, and there is no right or wrong answer to this. But practically what we've seen is the FTA is looking at a unit level, which means a can of apple juice or a can of orange juice, not a pack of 12 apple juices. So that is something one needs to keep in mind. Because, and again, Stockpiler is something which has been done in the past, and the audits will start very soon in terms of checking what's the calculation and everything. So one needs to keep this in mind: at what unit level have you calculated the excess excise goods stock. The next, determination of RSP of each product. Again, I wouldn't deal in this in terms of explaining a lot, because Gaurav has already explained this. You look at price published by the FTA, and then you obviously look at the designated RSP, which is the detailed calculation that you need to undertake. And whichever is higher, you use that to pay your taxes. As we move to the next slide, other challenges. these were specific challenges that we discussed, but broadly, again, more from a compliance perspective. As I said, excise is more of compliance. Again, there are challenges in terms of classification as well, but the top 3 or 4 challenges which we could talk about is product registration on branding. Again, it's more of a process. It does take a bit of time, and that's the challenge, because it may so happen that your product is not really registered, but you have a consignment that needs to be brought in or sold. So the product registration on branding, it is a challenge. Stockpilers working and audited declarations. Now, again, October 17, the audit period, again, this is related to the audits also, which will be initiated. 5 years is the period of limitation before the FTA starts auditing taxpayers. Now, October 17, so this October 22 is when 5 years will get over, and starting next year, the FTA will start losing 1 year each. So therefore, we can expect there will be a lot of audits. And more from a stockpiler's perspective, they will be expecting that you have the necessary calculations, the audited declaration. So as part of the stockpiler provisions, you are required to have statements audited by external auditors who kind of certify that this was the stock that you held. So, and what we've seen is at times, since the law in October 17 or December 19 was new, people did not really have the knowledge of maintaining these records in as much detail. So that is something we foresee as a challenge which could crop up at the time of audits. Deregistration, again linked to audit, what we've seen is people who are purely stockpilers, and October 17, once their stocks were tax paid, they started obtaining deregistration. And again, FTA has really caught hold of these companies in terms of auditing them in detail. So deregistration again is a process. It's a slow process involving audits. Investigations, again, not just UAE, but across GCC, we've seen a lot of investigations happening. In fact, a few months ago, Bahrain had started investigating a lot of companies, and they could really, I think that we came across a number of 68 million that was identified by the tax authorities in Bahrain. And the non-compliances were really different, in the sense people did not register and just ignore the tax and did not pay it, or there were people who got registered, collected the tax, but did not pay to the tax authorities. So those are the kind of challenges that we've come across in excise, and we thought it'll be a good reminder or a check for the audience to keep in mind while they handle their excise tax compliances on a going forward basis. That really brings us to the end of our session, and we'd like to thank everyone for your participation. I hope this session was informative, and it did make sense to you. We'll be happy to receive questions over emails. Sorry, we'll just check. We do have some time, so maybe we can pick up a few questions. Yes, so it's we have a question. It says, if a product is a sweetened drink and marketed as a carbonated drink, what will it be classified as, since the rate of tax is same for both? So sorry, Gaurav, go ahead.
Yeah, so law clearly states that if a product is classified as sweetened drink and carbonated drink, so the answer is carbonated drink. There's Article 11.
Right. And that does make sense, because the government would want revenue on these products, and carbonated drinks got taxed earlier. So they would want to tax this from October 17. Can you give an example of amounts paid to FTA in error in case of deductible tax declarations? So really speaking, nothing immediately comes to my mind, but could be, let's say, your calculations were wrong, or it should be basically an error, can't be an interpretational error in terms of whether the classification is wrong. So you can't say that my product should have been classified as a sweetened beverage, but I have classified it as carbonated drink. That's not really an error. It's a matter of interpretation of law. So I don't think that those are the kind of error that will get covered in deductible tax declaration. The next is, can normal. Sorry, Gaurav, go ahead.
That's an interesting question. So when someone is asked whether FTA will simplify the excise tax compliances in line with VAT, it's a very interesting question because VAT is right now a manual return wherein everyone is punching the numbers manually. But in case of excise tax, it is fully automated. The returns are flowing through declarations. We don't know. This point was also raised in the taxations meeting, wherein most of the people have asked FTA to simplify the excise tax return and other compliances. We'll have to wait whether FTA is willing to reduce the compliance burden and make it similar to VAT. As of now, there's no answer to this question.
Right. Right, maybe another couple of one. Can normal loss scenario applicable in case of manufacture of sweetened drinks? So I'm not too sure from what perspective this question is being asked, but generally speaking, sweetened drinks are either bottled, canned, or put it in glass bottles or plastic bottles. But I don't think there'll be normal loss. You could talk about normal breakages or let's say damage in the course of production, but so yeah, I think there will be normal breakages, and you could create a scenario to say that, let's say, in the last 5 years or 10 years, if I'm producing 100 bottles, then 1 or 2 bottles generally get damaged. Therefore, there should not be an excise tax on that. Right.
Yeah. There's one question. So basically, the question is whether any tax invoicing requirements are there for excise tax like VAT. So the answer to this is no. Currently, there is no invoicing requirement for excise tax. But in a situation where, let's say, there's a taxable person who is purchasing accessible goods, and then that person is exporting those goods outside UAE. So that person can claim the benefit of the local purchase of the excise tax which he has paid to the supplier. In that case, supplier is required to issue the invoice. Now, in that case, invoice should specifically highlight that there is an excise tax included in it. So they can either show it separately or they can just write a statement, but that needs to be there. In terms of the tax invoice, if you're asking, currently there is no requirement.
Great. I think that's all from our end. Thank you so much once again. Please feel free to drop us an email if you have any question. Thank you so much. Have a good week.